Okay, great. Really excited. My name is Chris Wetherbee. I'm the Senior Transportation and Shipping Analyst at Citigroup. I am very pleased to be moderating the next panel we have today, which is the Container Shipping Panel. We have a great lineup across a couple of countries, obviously, as we continue to sort of run this remotely here. I'm sitting in New Jersey, and I'm joined by folks from a couple of other countries here. But we have Evangelos Chatzis, who's the CFO of Danaos, joining us. Jerry Kalogiratos, who's the CEO of Capital Product Partners, and Aristides Pittas, who's the Chairman and CEO of Euroseas. So we're very happy, gentlemen, to have you with us to get started on this container shipping panel. I thought maybe what was the best way to start was to really kind of just dig into what's happening on the ground today. Obviously, the reason why we're all doing this remotely as opposed to in person at the Metropolitan Club is because of the coronavirus and the impacts that it's had to travel and lots of the different aspects of our individual lives. But maybe Jerry, I'll start with you. Could you just give us a rundown on sort of how, number one, your organization is responding to the virus, and then maybe two, how you see sort of the day-to-day procedural impacts on the container shipping market? We can get into sort of supply, demand, and volume trends in a minute, but I'd like to sort of understand maybe a little bit better about sort of the nuts and bolts, and if there's anything that we would be maybe surprised by that has had to change because of precautions around the virus.
Thank you, Chris. I think when you look at, let's say, the more operational angle, the impact of the coronavirus for us really started when the outbreak hit China, and as we happened to have at the time two vessels, our last two ships actually, that were being retrofitted with scrubbers, they entered the shipyards right towards the end of last year, and what were originally 45 to 60 days retrofit scrubber retrofit durations, I think by now they've become more like a 3-month period, because there were capacity issues. There was a labor shortages in many Chinese shipyards. It was difficult to get spares out of customs. It was even more difficult to get superintendents and engineers to attend the vessels, be it within China or even outside. So if you want, that was really the biggest impact we have seen on the business so far. I am happy to say that one vessel has completed its scrubber retrofit, and the other one is expected to complete it over the next few days. But I think since then, and since the spread of the virus into the Western world, increasingly we are facing more issues, crew changes, boarding of third parties on vessels, implementing new policies. Of course, here onshore, we have rotating emergency personnel only in the office. So there are multiple challenges as far as, if you want, the more day-to-day operational aspect is concerned. But we don't have at this point any charter renewals, so we haven't seen other, of course, than the delay in the scrubber retrofits, any financial impact, so to say.
Okay, that's helpful. Evangelos, from your perspective, anything at Danaos that you guys are doing differently? Have you had any issues in terms of your crews? We understand, obviously, once crews do switch, getting them home is challenge as well. Anything going on from your perspective?
Yes, I think that Jerry summed up pretty well the effects that the situation has had on our business. Obviously, this is a once-in-a-lifetime event, and people are trying to figure out how to deal with this as we go along, and that is exactly why this is a day-to-day situation on dealing with the side effects of all this. Of course, there are disruptions in traveling. So actually, we're taking delivery of a couple of ships within the next 4 to 6 weeks And it's a puzzle we're trying to solve on how to crew the vessels and fly people out there. There are ways to do it, but it takes a bit more time, potentially quarantine 14 days for people before they are able to join the ship and so on and so forth. And for existing crews, I think the changes have gone a bit more back, exactly because it's not easy to repatriate people. Look, this thing has caused delays in shipyards, there's no doubt. As Jerry mentioned, we also had ships installing scrubbers that most of Q1, they stayed in the shipyard. And thankfully, all these works are now coming to an end. We also had a few ships coming up for rechartering. We did charter these ships at, of course, lower rates than what we would be able to achieve in Q4 of last year, let's say. But until now, we have not really seen an economic impact from our standpoint. We understand that volumes are down, which first volumes were down because of a supply side issue with production in China. Now volumes continue to be down from demand side effects, Europe and US. And we hope that liner companies can manage capacity properly because although the top line will be reduced, I'm hopeful that by managing capacity, keeping freight rates at decent levels, they will mitigate the bottom line effect of all that. So otherwise, we're working from home and with skeleton crew in the office, and we take it from there. Okay, that's great. Aristides, anything that you want to weigh in on from your perspective that you guys are doing or seeing that's kind of either different or a unique challenge in the current circumstances?
No, I just want to, I mean, I agree with everything that has been said, and this is the situation. I'll just mention 3 operational issues that we are facing, which are a little bit different, but along the same lines. We've got a vessel that we are dry docking for its special survey right now in China. We couldn't send one of our engineers there. Nobody's willing to go there. So the special survey is essentially supervised via video calls and the captain pulling the strings. So obviously this is not ideal, but it is one thing we're doing. We had another vessel. We are generally avoiding crew changes, and we've told all our crew that we are not going to be changing crew for the next month or so and have to see what happens. But we had somebody that fell ill in one of our ships in South Africa. We arrived at the port. The authorities said that we have to to screen him for coronavirus because he might have that. It was not possible to have it because he was at sea for such a long time. But anyway, we lost 2 days there waiting for the results. So things like that, operational things like that, happen all the time. We've sold the vessel to be scrapped in India, but now there is the discussion in India that beaching will not be allowed. And this is going to be a serious issue because if you can't scrap the vessels that you've decided to scrap, I don't know what kind of bottleneck will be faced there. So there's all these kind of operational problems that we are seeing these days. And I expect to see more of these till things get better.
Okay, yeah, no, that's helpful. It's helpful to understand what's going on from a practical perspective. I guess maybe Jerry, maybe coming back to you, can we talk a little bit about what's going on in terms of, I guess, demand on the demand side? You know, this has been a unique dynamic where China went offline for an extended period following Chinese New Year. They're ramping back, and from what we understand, kind of getting close to almost full capacity from a manufacturing perspective. So maybe a couple questions for you. Is China fully back, and are you seeing volume coming through the ports in China at a relatively strong clip? And then how do you think about sort of demand from the developed economies of Europe and North America, which are obviously just in the beginnings of sort of shutting down for a period of time? So can you talk a little bit about what's going on there?
Yeah. So I think at the beginning of the year, we were all fairly optimistic that we will be having a fairly balanced market, especially in the post-Panamax market that we are active in. You know, you had maybe decent demand anywhere around 2%, I think, for most analysts. And then supply was expected to be slightly higher, but the order book is quite low. And especially for larger ships, you had many scrubber retrofits that could limit that supply. So we were expecting that markets will remain quite robust. Obviously, I think this picture changed quite dramatically at the beginning with China. As you say, we only for the month of February, we saw a drop of 17% when it comes to volumes in Chinese ports. And of course, all the other issues that we described. Since then, if you look at port calls or volumes, you would say that in most provinces, maybe except for Hubei, where the whole thing started, volumes have returned close to normal or where they were last year at the same time after Chinese New Year. But again, as you say, there's the new dynamic of now Europe and the US. I think it's too early to say how this is affecting demand. Port calls for sure globally are down for container ships. But you have to look at the macro. So if you took the latest OECD estimate of 1.5% global GDP growth for this year, which is, in my mind, actually a very benign scenario, then you could say that we will see a big drop in volumes Q1 and Q2, and then a big rebound Q3 onwards as we're going back to restocking and more normalized consumption levels. However, so this type of U-shaped recovery, I think, could be good, or kind of very good even for containers, creating a spike in rates maybe in a quarter or two from now. But I think it's too early to say, because as long as we don't know for how long this is going to last, then you cannot make any sound assumptions and projections. The only silver lining that I would add here is that at the same time, what we just all described, I think those delays that we are describing with regard to dry dockings, scrubber retrofits, also shipyards calling on force majeure clauses in contracts, in quarantine periods for vessels in ports, all that potentially could restrict supply up to a certain extent and offset partly that drop in demand. Now, to what extent this is going to be offset, the dynamics of this offsetting, and to what extent the demand will dip, I think it's too early to say, but we are right now in the midst of it.
Okay, that's great. That's helpful color. Aristides, do you want to weigh in a little bit on sort of what you're seeing? I guess maybe the other incremental question I'd ask you is about charter renegotiations. I don't know if you've gone through any during the last couple of weeks or have any coming up in the next couple of weeks, but Evangelos had mentioned that as something that they're seeing. So could you talk a little bit about what you're seeing in the current market?
Yes, I have to say that up till very recently, container charter rates had held very firm despite what was happening in China. Now that this has come to Europe and the US, I think that we're starting to see charter rates dropping a little. What we've seen is that, and what we were thinking about a month ago was, it's good to have your ships in the Atlantic because there everything is still working, and the ships that you have there, you will be able to deploy them. I remind you that our company has smaller vessels, feeder vessels up to Panamax vessels. So we do intra-regional trade a lot. So for us, where we were was quite important. And we saw that it was difficult in the Far East. This has reversed totally right now, and it's difficult to have a feeder ship in the Atlantic, whilst in the Pacific, things and the Indian Ocean, things seem much better. And volumes are picking up. We're seeing it in our feeder vessels that are trading in the Far East, that the ships are more full than they were a month ago or a couple of months ago, which is the good thing. We have had, of course, a couple of ships that we had to renegotiate, to extend, and hopefully in this market, what you try and do is to extend with the existing charterers if they still want the ship. And we have been able up to now to get last done. But now we're at the stage where I think that we will have to accept lower charter rates, especially for the ships that are trading in the Far East.
Okay, got it.
Now all our ships are still chartered, so we haven't had to stop a single ship, but we've got some notices and we are in discussions with the charterers about an extension.
Okay. Evangelos, is that the same perspective that you had? You had mentioned the charter rates before. Just want to get a sense of how you guys are thinking about it.
Yes, that's right. As Aristides mentioned, over the past month or so, we fixed a few ships at rates slightly lower than what we had 3 months ago, pre-coronavirus. I expect there will be increased pressure in charter rates. Actually, the bigger ships, 6,500 plus TEU ships, had held up pretty well. I expect them to also start coming down now, starting feeling the pressure. And the smaller tonnage, I don't see too much more downside from where we are. Volumes in intra-Asia, where much of these ships are being deployed, are pretty decent. The whole issue, as I said before, is demand-driven. It's obviously Europe and US who are now at the epicenter of this pandemic.
Yeah, so I guess maybe the next question that I wanted to ask the panel was on any feedback, if anything, you're getting from your customers, meaning the liner companies. So understanding how they're thinking about this, and maybe any color that they've been able to give you around the duration of a potential slowdown, and maybe how they're thinking about things from blank sailing standpoint, how they're managing capacity. You know, Jerry, maybe could you weigh in on anything that you may be hearing from some of your customers?
I think from their perspective, there's a lot of uncertainty as well. And we are hearing of blank sailings. We are also hearing of some liners relating tonnage into the market. And of course, this is not good news for Trump owners because we now have our customers competing with us. But it has been up to now fairly limited, the extent of it. There is also rumors of certain new build orders that were being discussed from operators, from liners, that they're being put on ice. And I think any CapEx discussion at this point is being shelved as people want to deal with the uncertainty. There is, of course, again, a silver lining, which is coincidental. There is the drop of oil prices and hence bunker prices. So this is a big bonanza for many of these liner companies. This is generating additional liquidity. You know, we calculated that for a 10,000 TEU container, the savings that the liner could have compared to January bunker prices is maybe around $10 million. Multiply this by 200, 300 ships, and that could be substantial saving. But of course, depending on how long this lasts, there are definitely going to be other issues as well.
Okay. And Aristides, from your perspective, do you ever worry about sort of the counterparty risk that you guys have with charterers? I guess, you know, we're in a sort of interesting period of time here. I think freight, for the most part, is relatively insulated from some of the significant impacts we're seeing across sort of the global economy, particularly in the services business and things like restaurants and sort of personal travel or passenger travel. But does, you know, how do you guys think about managing credit risk during a situation like this?
Yes, I mean, obviously it's going to be difficult if this thing lasts for quite some time, because you know, the volumes will drop substantially. So I think this is critical to watch. Smaller charterers, I think, can suffer in this difficult situation. The bigger ones will also suffer, but they have the means to get some extension as needed. They've been pretty good up till now in managing the capacity by blanking a lot of sailings. So, as you say, freight rates have not dropped substantially, which is good, but volumes will start to drop, and I think will drop further down. And there will be a risk for some charterers. So we're trying to fix our ships with the biggest charterers, the ones that will be able to handle this as they handled the previous crisis quite well, with support from various sources.
Okay.
And
Evangelos,
Chris, if I may add, don't forget the liners are coming from a pretty good year, which was 2019. We've seen their results come out. They had piled up decent amounts of cash. Also, Q1, in terms of cash flow, the top line, the earnings, the cash income, if you will, reflected business of Q4, because there is a lag, of course, for transporting the cargo, and the lag or credit you give to your shippers to pay you. What we will now see from here onwards is the effect of the reduced volumes post-coronavirus, and this is going to start coming up, and it will exert pressure on their cash flow. Each company has different capacity or cash burning, if you will, capacity. And as I said, and as everyone in the panel said, they've managed to keep freight rates at decent levels, so that will mitigate the effect on the bottom line. Bunker prices are low, so that helps a bit. But no one knows when this is going to end. And if we face a prolonged shutdown of the world, I mean, all bets are off, right? I mean, no one can give you any answer. We all hope that this will be normalized within the next 2 or 3 months. And if this is the case, I believe there will be no permanent damage to industry participants. Beyond that, I cannot speculate.
Okay, that's helpful. Appreciate it. So, Jerry, you had mentioned this earlier in the conversation about the potential for coming out of this, this impact, this lull, if you will, around demand. Can you talk a little bit about what you think sort of the other side of this looks like? So, let's hope that we can keep this contained over the course of a couple of months, as opposed to something longer than that. If we were to think about the back half of 2020 and maybe how 2021 might develop, how do you sort of look out, if you can, have a pretty clear crystal ball, which I'm sure is difficult these days? How do you think this sort of back half of the year and the beginning of 2021 might shape out?
Yeah, that's a tough one. You need to I guess, to make a whole lot of assumptions, but maybe starting with supply, assuming that we see a slowdown in deliveries around 15 to 20%, which I think is definitely possible given what's happening, because shipyards are delaying deliveries, be it because owners are not prepared to take delivery, or liners. At the same time, you would expect that these prolonged dry dockings for scrubber retrofits will create a domino effect. And if people were expecting about 2 to 3% of capacity being caught up in scrubber retrofits, maybe that's a bigger number. Partly potentially offset by the fact that now that the spread has tightened some people will walk away from scrubber equipment, but I think this is going to be more a 2021 thing rather than 2020. As you know, people that are retrofitting scrubbers now are doing it because they have charter parties in place and they have paid mostly for the scrubber equipment. So what I'm trying to say is that supply, let us assume that that supply will be kind of rationalized or restricted because of what we're seeing now. Then one would expect a couple of depressed quarters. And then possibly as soon as this thing normalizes, and here I think the key element would be the world economy is going back to normalized consumption patterns. And I don't think this is necessarily an easy one, because we might see, this might not be a black or white thing, right? So we might see some months whereby we have a gradual return to normal ways of life. Then we could see a big spike as people have been drawing on inventories. Many factories have closed or are being closed on the back of this. And then you should suddenly see a big spike in demand, people returning to manufacturing, people stockpiling, and that should drive container demand upwards. So in that case, where we would have a bit of rationalized supply, no new building orders, and a couple of depressed quarters, and then a big spike in demand, I think we could be in for a fairly good mark in 2021. But again, and I know that I've said it before, like everybody else on the panel, that's assuming that this is going to be relatively short-lived.
Yeah, absolutely. It's hard to tell. Aristides, you want to weigh in? How does the crystal ball look for you guys in terms of late 20, maybe early 21?
Yes, I think Jerry said it all, really. We think it's very difficult to predict how long this it will take Western Europe to fight with coronavirus and to come back to normal. And this is the single most important parameter right now that will determine the future. If, as Jerry said, in a couple of months' time, we're able to put it under control and we start seeing a gradual recovery, I'm also hopeful that 2021 can be a very good year. I believe that 2020 was going to be a very good year before the outbreak of this coronavirus thing. So the less supply that we will have now, for the reasons that Jerry said, will make it even better year if we manage to get up to the global GDP growth in 2021 that we expected for 2020. So it really depends on things that it's on one thing. And this is a very, very, very rare occasion where one parameter drives everything. So all the others seem so irrelevant at this point in time. It's only this one thing that the whole civilization is fighting up for.
Yeah, it's a very good point. Evangelos, maybe could I have you weigh in a little bit on the order book? One of the things that I guess I've been thinking about is, number one, it's been touched on a couple of times over the course of the panel where it sounds like shipyards have constraints around them, whether it be having your personnel available to see, vessels coming out, being able to crew them as they're coming out of the shipyards. But can you talk broadly about the order book and maybe if there are going to be any sort of a deceleration or a slowdown of deliveries that you'd expect from the existing book? And then maybe we can talk a little bit about your personal sort of views on how you want to think about potentially placing orders, or will there be opportunities to add to the fleet in the resale market?
Yes, look, the order book, the supply side of the equation looked pretty good through the end of last year, right? So we were all expecting that with nothing spectacular happening on the demand side, that it would be a balanced year and we would have firm charter rates and so on and so forth. If anything, this improves the supply side situation. We will have delays in deliveries estimates are anywhere between 15 to 30%. I'm not sure anyone is really keen to take delivery of ships during this environment. People were pre-coronavirus, even people were skeptical on placing orders because of technological concerns in relation to emissions and the whole greenhouse gases the discussion. And I think also, as Aristides said, this is driven solely by the pandemic. All the other considerations have stayed behind. So all in all, as long as demand resumes, and as soon as world GDP growth goes back to some sort of normality, we should see a very good market. As I said before, it all depends on how long this is going to last for, because if it lasts for too long, we're going to see effects in the global economy that will be not permanent, but we will have a big hole that will not be able to be filled very quickly. So then we're facing another sort of more prolonged recovery.
Okay, understood. Jerry, I guess, any thoughts on the order book? I guess maybe a specific question that's maybe tied in is also, how much of the fleet do you think is currently sort of tied up in dry dockings or retrofits related to scrubber additions? That's one thing that has been keeping capacity out of the market. And I guess I'm kind of curious to see, that's part of the supply side equation as well as the order book. So wanted to get a sense of what you think is out and when do you think those ships actually come back into the market?
So a report that I was reading last week estimated that about 120 units, about 1.1 million TEU was in dry docks being retrofitted with scrubbers. Approximately, or at least rather 20 units, I'm sure it's more than that. They had 100 days scrubber retrofits. So that is definitely a material part of the fleet. And it also works, it has a domino effect, right? So there are other ships that are waiting to get in, and the more the ones delay that are there, then you could see this becoming more of a problem, exacerbating down the line. So as I said earlier, if people were estimating between 2 to 3% of TEU capacity being offline this year, maybe this is a 4 or 5 or 6%. I think it's too early to say. I'm sure that some people will walk away or postpone scrubber retrofits, especially some of the liners who have their own program. In the end, they can decide whether it makes sense for them to install scrubbers. But I'm sure that there's a lot of discussion around this topic, but for a large container, while the payback time has now been extended, it still kind of makes sense. So I don't see, for the large vessels, I don't see a huge amount of cancellations. But we have, though, having said all that, I think I have to underline that over the last 2-3 weeks, we have seen Chinese shipyards expediting, and they're almost at full capacity. So let us see where we are. But but now we have other problems, right? As Aristides mentioned, you cannot get people to attend those dry docks. If you want, let's say you have a Korean scrubber equipment manufacturer, how do you get your Korean engineers to fly in for trials or for the installation? So there are many other logistical issues that are hiding behind this, and I'm sure will not make life easier.
Okay, that certainly makes sense. I guess maybe staying with you, Jerry, for a minute, because I know you have some that you're working on, but when you think about those scrubber economics, and you kind of touched on that, what does the payback period look like today? As specific as you can be, we know some of the spreads have collapsed here to a degree. There still is a spread though. So, you know, how do you think about the sort of return on that investment here in this market?
Well, we actually never speculated on the scrubbers. So what we said is we are more than willing to install scrubbers, provided that we get our charterers to pay us a decent return on the capex. So we left it up to them, depending on you know, our relative position, whether we were already in a charter or we were agreeing to a new charter. We managed to get different payback durations. But if you think about, let's say, a 10,000 EU container vessel, right, which would have anywhere between, it would consume somewhere between 22,000, 25,000 tons of HFO per year, or compliant fuel per year, and you multiply this by a $70 kind of spread, that would still give you, you know, $1.75 million to $2 million savings per year, which, assuming a scrubber retrofit price of you know, all in, call it $4.5 to $5 million, it's still a fairly decent return. If you're an owner, of course, you have to make sure that you have a contract that covers for it. And I think that's going to be increasingly difficult in this uncertain market. But if you're looking at this from a liner perspective, maybe it still makes sense. So, and I think assuming that the spread is going to stay at $70, again, a very conservative assumption.
Okay, that's very helpful. We're running a little short on time here. So Aristides, I wanted to get to you and sort of get, you know, maybe a question that we can ask everybody on the panel is, you know, we're in uncertain times here, but it sounds like there are reasons to be optimistic. So when you're thinking about your fleet, I guess the question is, are you adding to the fleet? Do you think there will be opportunities to add to the fleet? And, you know, when you think about that, is that in the aftermarket, or you think that there are the potential for new buildings? I guess I want to get a sense of how you're thinking about strategically managing your fleet in this current environment.
Sure. I have one question for Jerry, if he can answer a little bit later. Just give me, because there's a cost in maintaining the scrubbers, which I don't know how much it is, but that also takes away from that investment. We didn't invest in scrubbers. We have smaller ships, and we felt the economics didn't make sense there. But to answer your question, I think very few people would place new orders, even though ships will become cheaper if this thing lasts for quite some time, because shipyards are starting to see their order books depleted. So that would pull down prices. Still, people don't know what kind of ship to build. They don't know what type of engine it will need in the future. So everybody's very reluctant, and I think this is a very good news about our industry long term. Until we find the next fuel, the next optimal vessel, we will have very few ships being built. So that is one thing. Of course, if this thing lasts, we will see cheaper second-hand ships. And at some point, that may be an opportunity for people that are cash rich to invest and to get some new assets, new second-hand assets in their fleet. But at this point in time, I think everybody's really trying to see how this will develop and managing operational problems rather than seeing a lot of things in the S&P market. First of all, you cannot even go and inspect a vessel today because of the situation. So that makes it even more difficult. So I think that if the market stays low and is prolonged, we will see also cheaper second-hand vessels, which will give the opportunity for some people to buy ships.
Got it. Okay. Evangelos, from your perspective at Danaos, can you talk a little bit about priorities in this environment? Is paying down debt going to be sort of the key for you guys? How do you think about sort of the next, 3, 6, 9, maybe even 12 months in terms of capital deployment?
Priorities right now are to take delivery of the ships that we have recently acquired. And to your previous question, we have over the past 4 or 5 months, we've spent money acquiring larger container ships, which we believe will fare well going forward. Obviously, this sort of disruption is not indicative of how these ships are going to fare in the future, but you know, we as a matter of strategy, we are out there looking to grow our fleet and including new buildings if and when activity resumes and all these issues around technology are one way or the other sorted out. So for the time being, it's getting through the storm. We are deleveraging as we have been. There's nothing extra to do. We are at a very comfortable level in terms of leverage. We're well below 5 times, and we actually do have extra capital to deploy if required. And we want to be given a chance to do so, and we hope this ends pretty soon.
Got it. Well, listen, gentlemen, we're out of time. It was my pleasure to host you, and thank you very much for joining us. We really appreciate it. Thank you very much.
Thanks.
Thank you, Chris.
Thank you.
Thank you. Bye-bye.
Bye-bye.
Bye.